Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look on euro currency. So it's really big week. Was a lot of important events. I would say that even some economical events were overshadowed by political events. And Telegram right now is like the boiling pot. So it's absolutely amazing amount of information, commentaries on current situation and so on. But many people come to the same conclusion that we do. If you remember, we said that July is a perfect moment to cut the rate, and this moment has been lost. It's missed by the Fed. And currently, well, we have considered this question in a report today with more details, some providing some background information, statistics, some data, but keeping it short, now Fed stands in a really big headache. Because 25 points cut in September will not help to resolve the problem, while the 50% cut will be treated like the panic on the markets. And what they're gonna do in the current circumstances, personally, I do not know. But the one thing that I could say that the Fed policy is becoming absolutely not interesting anymore. What the numbers we will get, what the CPI will be, what the payrolls will get next month or maybe in 2 months, it absolutely doesn't matter. Just because the policy of the Fed is known with certainty what they're going to do. And this subject, in fact, is taken off the table. The only question will be, so we will trying to estimate coming closer to September and what amount of rate they will cut. Currently, it seems that the 50 points looks more probable. Now we're coming from the fundamental point of view to our second stage. So concerning the Fed, if you remember, we talked about that the dollar should drop depending on how much it will drop. If July cut will happen, it will be a strong drop. If no July cut will happen, it will be a small drop. So now we've got the small drop, and this problem we have resolved. Second question is concerning the European Central Bank meeting in September. Currently, based on the information that we are getting, inflation still stands rather high. And we're not exclude the situation where it will become even higher close to the autumn. From that standpoint of view, we're still stand on the side that probably they will not cut the rate in September. At least for now, I suggest that this scenario is more probable. It means that euro currency in 2 months, in August and September, could get additional support and could remain on the positive side. So this is what we see right now. So maybe, if of course we will not get any force majeure factor, I don't know. So now it's very difficult to suggest something. So everything could happen after the Middle East situation and in general. So, but for now, it seems in this way. So in the coming week, since we've got the corresponding reaction on the payrolls, corresponding decision from the Fed, market keeps the bullish context. On the monthly chart, we've got the second graph, although on the futures chart we do not have it. We have the only single one, but it doesn't matter. Formally, on the daily chart, you could see that trend remains bearish. It's formally that just the technical byproduct of how MACD works. So it stands at the verge of the crossing, but for now it still remains bearish. Market comes to resistance areas, major one or 933 level. In fact, it already has been tested right here, so it means that for a second test it might be not as strong. Second interesting moment that you could see here is a kind of the hand and shoulders performance, right? So we could see this left shoulder, head, right arm as might be forming. And in current circumstances, we could stay focused only on the last prediction. This is our major swing to consider. We're not interested with the levels below this area. We're not interested with some deeper standing support areas, lows, and so on, because by two reasons. First of all, from the perspective of the hand shorts, the bottom of the right arm, this is the invalidation point by itself. Second, this performance is a weekly reversal, bullish reversal candle. So this was weekly bullish reversal candle. And from this standpoint, if market remains bullish, it has to hold the lows of this reversal swing, reversal candle. That's why, from the technical point of view, we will be watching only for the levels that stand inside of this resistance swing. We are not interested in anything else. That makes overall situation a bit simple. Besides, if I will show you dollar index chart, you could see what has happened. So bullish grabber that has been recently formed has been totally destroyed, and take a look at this collapse down. Daily trend has turned bearish on the dollar index, and 618 level has been broken. So while euro still stands around it, dollar index already has broken it really significantly. On the follow time frame chart, personally, I wouldn't object if we will get this kind of the pattern, by the two reasons. First of all, since market stands at the resistance and Friday session was really stressed, I hope that we will get some relief in the beginning of the next week. This first reason. Second reason is that actually this target of the butterfly stands precisely at 110 area. And if you will take a look at the weekly analysis in the report, you will see that we have two targets around this level, 109.75 and 110.26 area. So in fact, this level, this target stands in the middle between them. So fluctuation of the market around this level could lead to achieve both weekly targets. And from that standpoint of view, the appearing of the butterfly here seems really nice. Opportunity to consider taking the position. On the hourly chart, we actually have two moments to keep an eye on. First of all, this might be the setup for the scalp traders, because we have the great thrusting action. And take a look for the patterns. For instance, it might be double repo sell, or personally I would prefer the bread and butter trade, although for the hourly chart this level stands too far. It's hardly market will be able to reach it within the just 2-3 close below the 3x3. Besides, we already have them standing right here, so it seems more probable if retracement starts, it will start from the double repo pattern. So scalp traders could keep an eye on. Double repo will suggest the drop somewhere to the 108.55, 50% support. And in general, you could see that the cross of the every fib level, each fib level we have corresponding consolidation of the price to the left. So what does it mean? It means that if you plan to take the long position, of course, this is your choice, for example, to wait for precisely to the points of the reversal. If you would like to, if you're actually would like to catch the precise moment of the reversal, but it's more simple just to split position in part, as I said. And I think that from the area around 108.60, for instance, 108.55 is a decent area to start with. So we could see that if somehow market will show the 50% pullback, even the 30%, so also might be considered for taking some minor part of the position right here. So depending on what the pattern will be formed here and how strong action will be, if it will be slow, this maybe we could consider this level. If it will be double repo and market will start dropping relatively fast, and we could keep watching for 108.55, 108.40 area to consider, and keep in mind this potential butterfly that might be formed as possible prediction. So I think that this trading plan that we could start with, and then see what will happen on Monday. So that's probably all that I could say currently on the situation here.